hour after the live. I greatly appreciate each and every one of you. It really does mean a lot to me to see you each and every day participating in the midday market report. And I greatly appreciate the continued support you show me each and every day. It really does mean a lot to me, and it helps to move this great product. Not just with me doing the analysis and talking about the midday markets and things like that, but also everybody who continues to participate. And we make this a very, very intuitive audience. We have a very nice back and forth, and it does make it a lot easier to get the information out here for everybody. So good mid-afternoon, 1:55 p.m. Eastern Standard Time on this Thursday, October 26th, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So the market's pretty red today. We've got the Dow down 181 points, or 0.55% down to 32,854. Good afternoon, CJ2 Pilot. Welcome into the Midday Market Report. Hoping you're having a blessed day. For anybody who's been watching, we're trying to target down here to roughly 32,580. If we continue playing this true, which it looks like we are, and we'll decide from there. If we break that, we could be heading down to the bottom of the broadening wedge in the Dow Jones. Just be aware of that. If 32,580 breaks, we could make our way down to that 30,800 area, 32,850 roughly. So that's what I'm seeing in the Dow Jones. I want to read through this very quickly with the NASDAQ because it's had a historic day today in some senses. So NASDAQ loses more than 1% on Thursday, sliding deeper into correction territory. So the NASDAQ dropped deeper into correction territory on Thursday as Meta became the latest tech company to offer a forecast that didn't quite live up to investors' expectations. The heavy index lost 1.6%, dropping below its 200-day moving average for the first time since March. The S&P 500 dipped at 1%, while the Dow Jones Industrial slipped 195 points, or 0.5% with Thursday's loss. The S&P 500 is now off by more than 10% from its July intraday high. Following a 2.4% decline on Wednesday, the NASDAQ Composite is now officially in correction territory, down more than 10% from its high close for the year in July. Crypto Scrooge, welcome in. Thank you so much for tuning in. I thank you for those words of encouragement with the Midday Market Report. And please, if you're following, watch Crypto Solo Scrooge or Crypto Scrooge on YouTube as he covers everything on the XRP ledger, but mainly solo. And he's working up a follow now. Wall Street, well, let's see what we're at now. So following a 2.4, blah, 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 blah. Wall Street hasn't been impressed with big tech earnings so far, and the remaining ones, Amazon and Apple, will likely struggle. But I don't care about that. I'm going to read more into the rest of what happened in the market at the end of this report, including the the Q3 GDP report. I just wanted to touch on the NASDAQ very quickly there. So that's the Dow Jones, the NASDAQ, both correcting pretty heavily. But the NASDAQ as well as the Dow now here, if the Dow is going to end up breaking down here, 32,580, we would know by season way. Russell Thomas holding the front lines, my man. Hey, I appreciate that, Russell. I greatly appreciate that. I'm doing the best I can. Doing the best I can. My little widow's peak here, my son has it too, and it's funny. He has it. Julie has a widow's peak, and it's not as prevalent as my family as I thought. I guess I have one and Julie has one, but my son definitely has it. So it's cool how you see the genetic markers being passed from generation to generation. DXY 106.672, up about 12.5 cents or 0.12%. We've got this major W reversal forming that we've been talking about before the reversal was confirmed. But we're looking at this very hard. This W reversal, if it does confirm, like we've said, we would have to come back above. It's right around 107.40, and then you'd have to make your way up. Once you break back into the rising channel, I believe it would confirm a push up to that 10, almost about that 109 level is what I'm thinking. 109, and then we'll see how parabolic they really want to run this. But up until the end of 24, or the end of 23, I believe the US dollar is still going to run parabolically if the US government has anything to do with it. It's their last chance to run this out of oblivion here before the BRICS nations can legally get off the US dollar for petro. It's within the BRICS agreement that they have to buy with US dollars until January 1, 2024 to buy petro. But look at this. We've speculated, is that a massive W? I think that could be a massive W. I also think this is a hanging W that could pull us up. So we'll see. We'll see. So that's what's going on there. Thank you for that vote of confidence, Crypto Scrooge. I really do see it that way too. So, and if you're watching, please make sure to hit that like button. Nothing really major going on. Cryptos aren't running as much, so less people watch. Midday market report hasn't been as popular, but I like to do it each and every day nonetheless. US 10 years at 4.85%, down 2.14%, or about 0.11 basis points. We're still looking for either a consolidation since we basically finished this move, but it still looks to me like in time we're going to come above that 5%, but the simple fact is there's no interest. It's just the problem is the buyers of first and last reserve, the Federal Reserve, get to make the meat. So they get to decide which way this goes and how quickly. They're the ones buying up these, and it brings the price yield down. But as nobody buys it, it continues to go up. That's why that bull flag's profound here. Crude oil is down 2.23%, continuing the corrective phase. $83.34, or down $1.92 a barrel priced in U.S. oil. Looks like we could be trying to put in a small hold candle. We'll see if it plays out. Right now it's a bearish hold. We're going to see if we can pull the W. We're still trying to round and finish this cup and handle. I don't believe it's done yet. We finished a 2-layer cup and handle. But I believe in time, with an 85% probability, we're going to come up to that, not just 109, but about 123 probably. That's about a 60% probability. We come up to that 120 area. So consider that when you're trading. And then just gold, silver's up to 87.123, about 55 cents an ounce, or 0.64%. So, I mean, we're basically coming up to this uptrending resistance that I think we're going to break out of. I just do. With the prices going down when the U.S. dollar pushes out, I think we had a nice fake out in precious metals as we've been talking about. But we'll see if metals can hold and prove me wrong, or if it continues to push down after this. But I still think right now with the gold-silver ratio, we're probably looking at a 91.91. But we do have to get out of this rising channel to get up there. So I understand we could get rejected at 88.18, so just watch that. Gold's up about $6, pretty flat. It's trying to fight on this uptrending resistance. We'll see with the U.S. dollar, if it does pump, what happens with metals. Do metals still run unabated, because it looks like an inverted hammer candle could form here, or does it end up reversing courses if the U.S. dollar does push out? This will tell us everything with gold at 1975. As long as we hold that, we'll finish off the technical move to 2009 and then go from there. And you can see we've had what looks like a successful handle on the cup. And it's not that I think we're going to parabolically break down. It just, we could have a quick short squeeze to the downside with gold and silver, but I wouldn't be counting on it. It's just something that looks like it could possibly play out in the charts. So I'm trying to keep myself ahead as far as everybody else. But metals are in no way something you should be looking away from. Like, this could very well form this inverted head now. We've already started correcting with silver. But if we get this confirmation at $22.40, like we have, this would push you all the way out to $24. So be very, very cautious. I've been buying my precious metals since 2017. The only thing I'm trying to figure out now, because I sold at $3.30 and then it came down and went back up above my buy, but now it's below. I sold at $3.30 and I wanted to buy back in on B2 Gold when we got the confirmation. I was hoping we could run it down on it because there was a 75% chance with this formation that it could come down here and touch on a technical move of $2.40. The problem is you have to confirm this breakdown and not break back above. We got almost confirmed it, but had a V-shaped recovery, and now it looks like something bigger could be going on. So now we have to make an educated and informed decision. This is the bullish cross at the daily. Is this the time to buy B2 Gold? And I'll update everybody with that. Further, I'm going to watch the U.S. dollar and reserve my right to see how this W reversal plays out. Because if that W reversal does in fact play out, how it looks like it and it plays true and it does bring us up to like 109, the problem is you could very well see this, a little more of a correction and then a rise out. I'm looking to buy it on that rise back out, or the confirmation here like it comes out and then bam, and then we're gone. That's either way, I don't mind. I prefer it to be down at $2.40, but in here is just fine by me. This is your confirmation wing right here. So in no way am I going to be disappointed. As long as I get in before the big explosion, I'm okay with it, because then you'd be looking at a relatively strong move up to about $4. So the theory is if we can buy this structure and hopefully it gets confirmed, if you buy it, you'd want it to be confirmed at $3.17. You're looking at, even if you have to sell out at $4, it's about a 25 to 27% pump, depending on where you're here. Yes, Crypto Scrooge, confirmation is absolutely everything. It's a great time to buy silver right now with the gold silver ratio, 100%. 100%. JW, welcome in, my friend. I hope you're having a blessed day today. I hope you're having a blessed day. We're winding down here on the midday market report, as I just want to read one more thing. Thank you to the ones that are tuning in. Thank you for all the likes, too, for everybody tuning in. Thank you so much. Make sure you hit that like button if you're watching after as well. I greatly appreciate that. The Dow Jones today, NASDAQ tumbles on Meta earnings. Bonds rally after strong Q3 GDP report. Russ says, Tom is one of the only crypto guys on YouTube I listen to. Hey, Russell, I greatly appreciate that. That means a lot to me. Stocks fell Thursday with the tech-heavy NASDAQ slipping further into correction territory as markets digested better earnings and stronger than expected U.S. GDP data. The NASDAQ traded about 2% lower Thursday afternoon, continuing yesterday's slide on Alphabet's disappointing cloud revenue. The S&P 500 lost about 1.2%, and the Dow Industrial Average dropped 0.6%. U.S. GDP increased at an annualized rate of 4.9% in the third quarter, a dramatic acceleration from the prior quarter's rate of 2.1%, and the fastest pace of growth since 2021. Meta Platforms' third quarter earnings beat analyst estimates on top and bottom lines, with revenue growing 23% year over year and net income more than doubling. Shares initially rose in after-hours trading before tumbling Thursday after Chief Financial Officer Suzanne Lee said the company noticed something softening in ad spending at the beginning of this quarter and geopolitical uncertainty. Stock sank yesterday after Google parent Alphabet reported weaker than expected cloud sales growth, sending the tech-heavy NASDAQ to a 5-month low as Treasury yields climbed. Mattel and Hasbro shares tumble after warning about holiday toy sales. Shares of Mattel and Hasbro plummeted Thursday as the two toy makers warned of soft sales during the key holiday shopping season. I wonder why that could be. Could it be because we can't even afford our groceries in the USA now? Can't afford groceries, not going out to buy luxury TVs like I keep telling everybody. Those fancy ads won't work this year. Come out and buy this cheap free TV or 75% off TV on Black Friday. Ain't no one going in there for electronics. They want 75% off their grocery bill. Can't afford it. Too many people are living off of credit right now, and in 2024, the credit crunch becomes reality as everybody's credit limit is breached. You can't breach it. Then you're done. Then you can't even pay the minimum. You can't pay your bills. So now you're in trouble. And a lot of people are coping with higher credit limits because they're willing to give them more credit, expansion of the money supply, yada, yada, yada. You know how it works. And they're derivatives of 10. They loan you 1,000, they get 10,000 to spend over the top because they can lend the same credit out to 10. I mean, we don't even know how bad it gets. Anyhow, Mattel CEO Anthony DeSilvestro said the industry was dealing with the challenging macro environment with higher volatility that may impact consumer demand. The company indicated that it expects its full-year sales will be comparable to the $5.44 billion it made last year. The news dampened some of the enthusiasm following a boom in demand for Mattel's Barbie dolls, fueled by the hit movie Barbie. Third quarter Barbie sales jumped 16% to $605 million, helped Mattel post $1.92 billion in revenue, a 9% year-over-year increase that exceeded forecast. Hasbro reduced its full-year guidance as slowing toy demand cut it to its sales. Consumer product sales fell 18% year-over-year to $957 million in third quarter, in part because of soft industry trends. Notice that word, soft industry trends. How many times are we going to hear that now? Shares of Hasbro were down close to 10% Thursday afternoon, while shares of Mattel lost more than 7%. Line Technology, shares of the orthodontic product maker tumbled more than 23% after it cut its full-year sales outlook, citing deteriorating trends, including decreased patient visits and increased patient appointment cancellations, along with fewer orthodontic case starts overall. Western Digital Corp shares of the maker. Hey, Joshua, thank you so much for the $1.99. I really appreciate you paying it forward like that. What's up, T-Speaker? Thank you for everything you do. Hey, I appreciate that. It's worth it to me. I know there's not a lot of people in the midday market report. There's 30 people in here or so, but I'm okay with that. I like doing the midday market reports, and I'm going to continue doing them, even if they only get 400 views or 300 views like yesterday. The day before it got 700 or 900, so you just can't tell. But whether there's one person that's getting something out of this or 100, I'm going to keep doing it as long as one person appreciates it. I'm not hard to please. Western Digital Corp shares of the maker of data storage devices fell more than 12% after SK Hynix Inc. voiced opposition to Western Digital's proposed acquisition of Japanese computer memory company Kioxia Holdings, of which SK Hynix is a major shareholder. Whirlpool Corp, the home appliance maker, shares tumbled more than 12% after it lowered its full-year earnings to about $16 per share compared to $16 to $18. Masco Corp, shares of the home improvement and building products maker, gained 6% after it raised its full year's earnings outlook after reporting wider margins from cost controls and favorable sales mix. Julie, a lot of these companies are looking very bleamish. They're not looking great across the board, especially like the homemakers and the like for Christmas time for the toy makers like Mattel and Hasbro. They're not saying they're looking great. If it wasn't for the Barbie movie, it looks like they wouldn't have done anything. That was about 40% of their year revenue just in the Barbie doll. That's not good business. International Business Machines, IBM, shares of the tech company rose more than 5% after its third quarter earnings beat analyst expectations on the top and bottom lines. The company swung to a profit, reporting net income of $1.7 billion after losing $3.2 billion in the year-ago quarter. Oh boy. So at least they cut their losses in half, but it's still a mighty hefty loss. UPS trims its outlook after steep decline in third quarter profit as labor and fuel costs rise. And it's nice this week. We can cover a lot because it's earnings season right now. So you can see how some of the earnings came in higher, but still, outlook is poor. Very poor. It's like I always say, the earnings, they put lower numbers and then they beat them. Well, that's just their low expectations. A bad earnings is a bad earnings. It doesn't matter if you beat a bad earnings projection. UPS on Thursday reported steep declines in revenue, and there we go again. Profit for the third quarter as demand for the company's services declined amid economic and labor-related challenge. Yeah, because UPS is terrible now. Their customer service is awful. You go into a UPS parcel service in the USA, you might as well just bash your head into the wall before you walk in. That's how it feels when you walk out. They're very rude. And if you work with UPS, I'm not being a dick, just do better. Remember, you're being paid by the government, which means it's coming out of our tax dollars. So the last person you should treat like a piece of shit is your employer, which would be us because we're paying the tax dollars, period. The company also trimmed its guidance for the full year, sending shares lower in early trading. So do I feel bad for the No. I started using Amazon in spite of them, and mostly Amazon because of that. And people say, well, you should just use the mail. Use the UPS. Why? So I can get yelled at and get overcharged? No, thank you. The package delivery company's revenue fell 13% year over year to $21.1 billion. It doesn't matter. The government just picks up the tab and we have to pay a little bit more this year, which fell short of analyst expectations. Adjusted earnings of $1.57 a share came in higher than consensus view, but represented a 48% decline from a year ago. So the consensus view was that it was going to be a little lower than this. So 48% decline from last year was good because, you know, they beat what they thought of, 52% was what they thought. So congratulations, you're 48% worse than last year. Next year you won't be in existence if you continue this trend, not in the way they are. Chief Executive Officer Tomei said that Traffic UPS lost to other carriers while it negotiated a new labor contract with Teamsters represented workers over the summer had started to return. However, the company cut its full revenue target to between $91.3 and $92.3 billion and sliced its adjusted operating margin projection to 10.8% to 11.3%, citing the global economic uncertainty. It's bad business is all it is. Bad leadership. Poor work environment. UPS shares were down about 4% as of 11 a.m., and I expect it to cut in half from here. Mark my words, UPS shares will cut in half by late 24. Maybe early 25, but it's going down the tank quickly because funding is becoming less and less valuable. You're not going to have funding at a rate you are right now, period. UPS shares were down about 4% as of 11 a.m. Eastern. And these are my own views. This is my own personal experience. So, obviously, you can have different values and different feelings. I used to feel a lot differently 10 years ago than I do now. But now it's just a disgrace. Lowest level since July 20. And that's across the board. That's not just UPS. That's across the board when you go for customer service in most cases now. They have lost nearly 20% of their value year to date. I just hold them at a higher standard because I'm paying their fucking wages. You take my tax dollars and treat me like a scumbag, I just stop using your service. So unless they're going to deliver me mail, I don't go out of my way to use it. Ever. I don't know. I want to finish this too. MasterCard beats earnings as consumer spending drives transaction volume. MasterCard third quarter fiscal results came in ahead of expectation, with payments processor reporting a second consecutive quarter of profit growth on a continued strong consumer spending trends. MasterCard posted net income of $3.2 billion or $3.39 per share, representing an increase of 28% on an year-over-year basis. The company's revenue also climbed, growing 14% year-over-year. Izzy says, UPS hubs where I am locally are privately ran and operated by the same types that you are describing. Oh, that sucks. That sucks. I remember when it wasn't like that. I used to love UPS when I was younger, because I used to do a lot of stuff on eBay, and they were a lifesaver back in the day, in the early 2000s. And then it just, I don't know what happened the last 10 years. It just, I don't know. It makes me so disappointed. And it sucks for you. And the reason why this is the case where MasterCard's earning, even though it says consumer are buying less, well, think about two things. Higher interest rates have also been a boom for, let me finish this now. Higher interest rates have also been a boom for payment processors like MasterCard, which is able to charge higher interest rates to its credit card customers in the process. However, the company forecasts weaker revenue growth on uncertainty around interest rates and the economy. Shares were down more than 4% Thursday morning, but are up more than 15% from this time last year. So think about that. Credit card companies are doing record profits. I don't want to say record, but they're 15% higher, their shares, and their revenue this year is up $3.2 billion, their net income, to $3.39 per share, representing a 28% increase over a year basis. And they're making 14% more in earnings, up to $6.5 billion for the quarter, because of higher interest rates. So as we get poor, as we have to use the credit cards as a last reserve, they can continue to raise the credit interest rates. So, I mean, what do you think about that? And that goes unnoticed. If you pay your credit limit off every month, you don't give a shit. The moment you stop paying your credit limit off, you're going to slap yourself. The European Central Bank, ECB, on Thursday held benchmark Eurozone interest rates steady for the first time in over a year, ending a streak of, 10 consecutive rate hikes that brought the bank's deposit rate to record 4%. Darren, welcome in, my friend. I hope you're having a great afternoon. Great afternoon. I need to catch up with you. I've just been crazily busy lately. And my voice has been gone 9 times out of 10 days because of the coaching season, which this season ended. We made it to the championship, as some of you know, but we got another season. I got a coaching in another place starting November 6th. You know, when you make it to the championship, people want you to coach. I'm just kidding. Eurozone inflation fell to 4.3% in September, a dramatic drop from August reading of 5.2%. The ECB is hoping that its past interest rate hikes will continue to work their way through the economy, tightening financial conditions and dampening demand. The ECB, like the Fed, reiterated its data-dependent approach, keeping the door open for further rate hikes should inflation prove stickier than expected. And thank you to the 30 people in here and 28 likes for the ones who are watching. I greatly appreciate that. Greatly appreciate that. Thank you so much. You're welcome, Infinite. You're so welcome. I appreciate doing this, and I appreciate the ones who appreciate it. So consumer spending turbocharges U.S. GDP growth. Consumer spending sent U.S. GDP surging, according to the Bureau of Economic Analysis' first estimate of third quarter GDP. The U.S. economy grew at an annualized rate of 4.9% from July through September, more than 4.5% that economists were expecting, and well above the 2.1% increase in the prior quarter. Accelerating GDP growth was attributed primarily to a broad increase in consumer spending on goods and services. The personalized consumption expenditures, PCE, the price consumption expenditures, Price index, the Fed's preferred inflation gauge increased 2.9% after rising 2.5% in the second quarter, but core inflation, which strips out volatile food and energy, because who would want to keep food and energy in the volatile core inflation? You know, because that's just our core, what we have to buy. Food and energy we use every day without exception. Decelerated to an annual rate of 2.4% from the prior quarter's rate of 3.7%. But again, if you put in the prior to it, I guarantee you it increased by the same margin that it fell. Stock futures swung higher after the release, signaling the era of bad news is good news, in which strong economic growth and low unemployment were interpreted as more reason for the Federal Reserve to raise interest rates may be coming to an end. I mean, how stock futures fell further as tech rout continues. Future contracts connected to the Dow Jones Industrial Average were 0.4% lower in pre-market trading. S&P lost 0.6%. NASDAQ 100 futures dropped 0.9%. So, pretty bleak day across the board. Cryptos are, retrieving a little bit, but we're still in bullish territory as long as we hold the support level. So, I'm XRP Future Millionaire. Make sure to hit that like button. I appreciate everybody who tuned in on the Midday Market Report.